Good morning, everyone. Hey, Faye, how are you this morning? Well, another day, another gap. Hey, Jerry, how are you? Hey, Moran, good morning. So we're up 60 points already. Hey, Nate, good morning. How you doing? Doc, how's it going? Well, the good news is that we have a ceasefire. The bad news for our friends who are short is we are continuing with the short squeeze. Yeah, Howard, I'm gonna talk a little bit about this because well, I think it's important. You know, I see I saw somebody yesterday, not in our room, but some guy on Twitter saying how he just blew up all of these accounts, and I think the funding firm like banned him or something like that because he went on tilt. And I'm not familiar with this whole tilt thing. I've heard of it, I've seen it happen, and it's actually scary to see somebody throw all their money away. It's actually a really scary thing. I've never experienced it working in the industry. I've only experienced it with retail traders. And I don't think you should trade retail if you tilt and blow up accounts. Um, that's just not meant for you. There are ways of dealing with it, but if you keep experiencing it over and over and keep blowing up accounts, be careful with that because, maybe just give your money to an investment advisor and just leave it alone. Because that is really dangerous behavior, and it's really sort of soul crushing to see people do that. I don't understand it because it's never happened to me, and it doesn't really wash in the industry that you don't tilt in finance because when you tilt in finance, brokerage firms go belly up and people lose their jobs, and so they have what they call risk management and internal controls which are supposed to check those things. Now, the problem with retail trading is you don't have any internal controls, so you have to create your own. Market situations like this, can you imagine how many people are short from yesterday? The liquidation yesterday, you know, the liquidation that we had yesterday, when we looked underneath the previous day's low and came back up from it, that created a massive short squeeze. And adding to that, then you had the news, which took us up here. And we had a P profile, and now we're adding to it. We have two very visible short positions. I'll go and show you those in a second. The upper target is 61.51 with these levels. And there's really nothing to sell into this. If we take, for example, swing highs from way back, if you go way back to the beginning of the year in February. There's some swing highs here. We just took one out at 61.28. The next swing highs are above 51, and then there's one at 61.68. So this market's really quite a bit, a lot of people will say it's extended and that sort of thing, and that's great, but extended doesn't mean anything. What does mean something is that this market now is above the short-term cost basis. Now, what that means is all of the product is priced underneath 61.11. Pretty much for the last, for quite a while, right? So everything is priced under 61.11, which means traders who are swing long have no reason to sell the market. Do you guys understand that? So if you're sitting on 10, 15,000 contracts and that market is getting marked up, now what's going on? What are we 2 days away from? We are 2 days away from month end. So Thursday is month end, Friday is the last trading day of the month. I don't use the term overbought. And John, you should take that term and throw it out the window. Right? What it means is the price, current price, is above cost basis. Now this is where, in this room, hey Dan, good morning. Things are very different in this room because I actually teach you the business. So John, if you had 1,000 units of something and they were priced under $5, and now the price is $8, is it overbought? If you paid $5 for 1,000 units of something, and someone came to buy them from you at $8, would you turn them down? You wouldn't. Unless you're nuts. Right? You'd sell them at 8. If they were willing to pay 9, you'd sell them at 9. If they're willing to pay 10, you'd sell them at 10. Why? Because you're a businessman and that's profit. So everybody has fancy words and things like that for markets, but this is the cost basis of your goods. This is where you're selling your goods for profit. The only reason that we'll come back under 61.11 is if the sellers start to compete and buyers go away and we have to lower price. Price moves down because it has to. Why? So sellers can get rid of their inventory. Inventory has a price to it that's called the cost basis. That's how much you pay for your goods. It's very simple. Once price gets above cost basis, it's a very difficult short. Because the supply is held by larger traders and wholesalers who didn't just fall off the turnip truck, right? So by the example we just worked through, why would you sell your product at 3 if somebody's willing to buy it at $8 or $9, right? You wouldn't. And that's why just arbitrarily shorting a market because it's quote unquote overbought has led to the destruction and ruin of countless uneducated traders over the years. It's horrific. How many people trade money in markets, not knowing how or what's going on. So that's what we attempt to teach people at the Trading Syndicate. We want to teach you why. So now there's a seller. Great, right? So now that you see that there is a seller, you can short. You short down to where the buyers are, right? It's not rocket science, but it's not easy. So you've got to do some work, right? So let's go take a look at our balance levels for this morning. My balance level where the cost basis is 61.05 and 3/4 to 12 and 3/4. Double it to 26, that's the profit zone. Double it again to 54, that's the 4 times profit zone, right? So we finally got some sellers, right? And the only reason that we have sellers and the market is moving off of its highs, what the hell happened to my chart? Oh no, 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 no. Oh, I hate when this happens. Sorry, folks. When this happens, right, you have sellers initiating here, and you're going to come back. This is where the shorts are trapped. So this is where the buying is, okay? So a lot of traders will short down to the bid, and that's where they cover, right? Uh, I wish you could just reset these charts. Now this thing's ruined. Oh, I can't believe I did that. I've got 64 gigs, Doc. It's not the computer, it's Sierra Chart. Sierra Chart unfortunately has this thing when you scroll that if you scroll too much, your chart just goes blank. Yeah, exactly, John. And that's wrong. So you really don't want to use terms that are completely off, right? What's the point? I'm just going to have to redo this all. Sorry, guys. Give me a moment. Ooh. Yeah, the term is widely used, but it's not correct, right? And hoping is not a good way to do business. You know, if you went into a business situation and you were hoping for something, it's not really the greatest way to do business. You know, you have to have some sort of sound business principles, right? Five and 3/4, and top is 12. There we go. You know, and unfortunately, a lot of traders get hung up on this, and it's it's horrible because oh, it's got to go lower. It has to do this. It has to do that. It's overbought. It's oversold. It's just horrible. Yeah. Yeah, you hear it all the time, John, but does that make it right? Right? Just because you hear it all the time doesn't mean it's true, right? And that's why there's something called smart money and there's something called dumb money, right? Smart money's quiet. They don't tell you these things. Why does smart money not tell you these things? Because they need sheep. Thanks, Mike. Anyway, we're back. Lord, Lord, Lord. I just redid the chart. Right? They don't want you guys to know this stuff, right? They don't want you guys to know this stuff. Why? Why would they want to teach people how to be smart? Exactly. You understand it's all marketing, right, John? Who's going to buy the stuff if they don't tell you to? Listen, I'm going to tell you guys something, and don't tell anybody this. Even though this is on YouTube, who cares? This is why I don't show my face. Back in 1994, the first time I went to New York, while we're waiting for this, we're in distribution right now. If you're looking for trades, I would say this looks like a look below and fail of 33 and a half, but there are going to be sellers here. Just so you know, right? So I go to New York for the first time with clients, and my clients were staying at the Waldorf, right? Very famous hotel. And I didn't know this, but we had dinner with a certain gentleman who's still on financial television. And back in the day, if you had a penny stock and you wanted it mentioned on CNBC to bring buying in, you would give this particular gentleman $50,000 in cash and Bob's your uncle, right? So at a very early young age, I learned that financial press, all that stuff, they're in the pocket of who pays them. That's why it's very, very, very important to trust what you see on the chart because the chart doesn't lie, right? Do you guys remember after the internet bubble, it came out that a lot of now financial analysts have to say that they have a position in a stock that they're recommending. Before they didn't. So they would say you should buy this stock. They'd publish a big research report. It's because the brokerage firm that they work for is long the stock and they need to get it off their books, right? Right? Remember, it's a market. Markets exist to sell you product, right? So trust the chart. Trust the chart, right? If a market does this, if you draw a level, okay, like we've got 33 and a half, if the market goes under 33 and a half and comes back up over it, it means that the sell orders that took us underneath, right, are finished. Now, if they come back in and start selling, then we'll break that level. But if nobody needs to sell underneath 33 and a half, they won't. Why? Because they'd rather sell at 34, 35, right? It's just really simple. But nobody tells you this. Nobody tells you this. And that is a shame, right? So now what's going on? The market's going back and forth over this 33 and a half. That's because business is slow. But watch the offer. Watch that red line on my chart, right? That is the lowest price people are willing to sell at. The bid is the highest price people are willing to buy. The bid will follow the offer, right? Only when price is being marked down will the offer chase the bid. And that you can visualize that by, if you ever seen it on TV, or if you ever go to those markets in Turkey and you go to buy something and you go, how much is this? They go $20, and you go, no, that's too expensive. Then you barter and you go, no, that's okay, I'm gone, right? You start walking out of the store and they're like, wait, my friend, wait, wait, and they chase you out of the store. That's when the offer moves lower to capture the buyer. Remember, the inventory in the market now for large size traders is all priced. The highest inventory is priced here, under 14. We're trading 61.35. So whether the wholesalers sell it at 35 or 33 doesn't make a difference. But of course they'd rather sell it higher, right? Hey Tim. Hey Phil, how are you doing? Right? Just always remember that. Right? This is a little sideways action because we're waiting for London to open, right? Do you ever get those emails where it says, "Oh, this new stock is coming out and it's a hot stock and blah blah blah," and then you'll see in the disclaimer, nobody reads the disclaimers. I love reading the disclaimers because I used to write them. Right? The disclaimer is in writing that is 1,000 times smaller than the normal font, right? And it'll say we are being compensated to tell you to buy this, right? Let's see if they sell into it at 37 and a quarter, right? We are still in the front end of this move, ladies and gentlemen, right? There is no reason to put something on sale if people are lining up to buy it. Does that make sense, John? If people are lining up to buy something, right? Why would you put it on sale? You wouldn't. So if you did the little buy of 34, 35, right? If we start lifting the offer, that means the red line's moving up. Next place you're looking for competitive selling is right here at 38. See? Yeah, nothing has changed in the economy, Doc. Exactly. Now, you also have to remember that this move that you see happening, right, is built on a short squeeze. Nice trade, Moran. Sell into strength. This move is built on a short squeeze. Short squeezes will come undone like a cheap suit. Any trades you're on the lookout for? I just told you one. Look below and fail of 34. So now, Pandy, I'm going to ask you something, right? Because you're looking for a trade, right? You missed this, right? What would you do now? Would you just start trading away blindly, or are you going to maybe sit and watch and see what develops? Every morning, and I'm really happy that you do this. You pop up and you're like, where's the trade? Where's the trade? Where's the trade? Which means you're not really watching the market. So start watching the market. So what is your primary trade setup? What's your go-to money-making trade? What is a trade that you've done like 500 to 1,000 times that is repeatable and scalable? Now, if I'm asking you these questions, right, it means you should have a method to do business that's repeatable and scalable, that manages your risk. So you're not blowing up accounts, you're not shorting in the hole, you're not buying at the top, you're just not fishing for a trade, right? Does that make sense? Smart money looks to see what the market's doing, and then when the market shows it an opportunity that matches their way of doing business, they execute. Dumb money just trades out just because they need to trade, right? Because they have all of those addictions like tilt and FOMO and right? I've only got 2 hours to trade now because I've got to work, so I've got to make some money. All of that is going to do nothing but blow up accounts, right? Be smart about it, man. Be smart about it. Be a little shrewd, right? You won't hear this from anybody else. They'll be like, I'm just going to buy it here because it's going to break out. Yeah, it most probably will break out. But where would you put your risk? Like, so say if you bought 38 right now, where would your stop be? And why? Right? If you don't have a business reason to take a trade, you need to see a business reason right now to take a trade. Yeah, you don't have a business plan, you should not be trading. You should learn how to trade. And I'm glad you're with us right now, so you can learn how to calm down and build a business plan, because trading is a business. See, this is how they get you. They put you, you're in your house, you're in your apartment, you're sitting in your pajamas, you have no sense of urgency, no sense of risk, right? And you just pushing buttons, right? When you work at a brokerage firm, you have people above you that monitor you and what you're doing so you don't make stupid business decisions. Because when you make stupid business decisions, you affect the firm and you affect other people's lives. So there are things in place. Hey Dave, how you doing? Is Paul speaking today, Raj? I haven't even looked at the news on what's on deck. So when the candles get tight like this, it means that business is slow, right? There's not a lot of order flow. Now, a large trader who comes in and sees this, or an experienced trader, is going to go, Jesus, I'm not going to buy this, right? And they won't short it either until they see a seller. Because if you see tiny little candles like this, That means there's no trade. Now, if you're a gun to your head degenerate trader, short it and put your stop here. And look for a fill down here at 35 and down here at 33. Those for the traders who have to trade, who have a gun to their head, right? Because you've identified a seller, right? This is a backfill, and it's going to try and bring in buyers if there are buyers in this area here. Otherwise, it'll come and fill these bids here. There's a stop at that K low. Let's see if we take it out. And that's at 61.32. It's okay to not have a business plan. These are all the things that I teach at the Trading Syndicate. Not to tout the room, but that's why I think our room is superior, because we don't charge a lot and we teach people the business so they're not just flailing around like a chicken with their head cut off trying to make money. Right? See how they're filling the lower bids? Now, is that going to bring in buying? Or does that bring in selling? Because if it brings in selling, you'll be looking for bids somewhere here. Just in this area here. Otherwise, it's going to do another look below 33.5 and fail. What's going on here, folks, is distribution. The traders who are long between 6 and 14 are selling that product up here. And where's Howard the Puck? Right? Our point of control, it's exactly short covering. So our point of control, or our overnight one, where is it? So our overnight point of control is here. That means the majority of the cost basis. See, look at that. Look below and fail of 33.5. Right? Once you get good at this, you can scalp those, right? So now we're trying to move that point of control up, and that means good distribution. So this move here, what did it do? It did two things. Number one, it flushed all those trap longs out. And number two, it trapped some shorts underneath 33.5. So when we get back down to 33.5 later, look for buying there, because there'll be bids. The candles can be a little big tonight. So make sure you watch your risk, okay? Make sure you watch your risk. See? Look at that. Brand new high again. This is very, very normal in markets that have massive short positions. Thursday is month end. Thursday is month end, right? There's going to be quite a bit of short covering with the news, right? Don't get trapped short when everybody's trying to buy a market to cover before the end of the month. If you don't know what month end is, come visit us at the Trading Syndicate. We'll teach you, right? This is a business. And month end is an important thing. It's also the end of the quarter, right? So if you understand the business, you understand how better to trade with the flow of business instead of against it, right? That's all. So we're just going to go back and forth now. This is what we call a rotation. you see that back and forth in the box? That rotation is distribution. If we stay over 39, be careful shorting it, right? And it's okay to not have a trading plan, a business plan, right? Nobody does when they start trading. These things all have to be learned, right? Even when I started trading, when I switched from institutional to retail, I thought it'd be easy. I was like, oh, this is going to be a walk in the park. It's the hardest thing I've ever had to do. So don't feel bad, you know? What did I say about not being short? Exactly, right? No institution is going to buy it here. This is all short covering. But that doesn't mean you should short it. Right? You have to be very, like Elmer Fudd, you have to be very, very careful. You're hunting rabbits, right? When you're shorting these kind of markets. It's just better to go with than try and fight it, right? And a lot of people will say, I don't want to buy it this high, right? Well, then scalp long, right? There should be a little buying at 39. Let's see. We're looking for the bid now. They made shorting really popular with that movie, The Big Short, right? And retail traders got really sucked into that, you know, short, short, short. And there is a time to short. You can short backfills if you once you get good at it, right? So now we're right back in that rotation. The last time we found bids was right here. So if you were to draw a balance zone, it would be this, right? If you just came in and started trading now. Now let's see where the sellers engage. Yep, right there. Jeez. Could you imagine those large traders that are short under 60.32? Oh my goodness. And going into month end. Brutal. Ugh. The other thing too, now I haven't taken a trade yet, right? I'll do some scalping. Once I see a clear trade, the other thing is I think I slept 3 hours last night. wasn't feeling really good. So I know my reflexes are a little slower, and like my cognitive skills are a little. And also you got a big gap, so you gotta. When you see a market that has a massive gap, right? Something's changed, right? A gap means change. That's another thing I wanted to talk about. When a market is above the previous day's range, that means that there is some pretty massive change, right? Especially when it's a big gap, right? So you got to pay attention to that, right? Let's see. Right? See how it magically stops selling off around the 35s, right? Pay attention to those things. Don't worry about the wicks or what type of candle it is. Just look where they stop selling. The reason that they stop selling here is because they don't have to, right? Doesn't matter what kind of candle it is. When the sellers get down there and they see people lining up, their software will tell them to lift the offer, and it will, until other competing sellers start to sell, and then they'll sell it down. That's why when you see this, that's those sellers competing with each other. Business is slow. Now, if you hold a market steady like that, buyers will come in. Right? And what are we looking for? We're waiting for that point of control, which is around 1700 and is that 86? Yeah, 1786. We're looking for that to move up here. Where's Howard? I scalped long 36. I'm just selling 37 and a half. I'm flat. Just wanted to see whether my reflexes are any good. So when I took that trade, it's not an A plus setup. That was my out. I went long 36 into this move up. I knew that we were going to have a seller here, so I got out of it before that. We're going to get that rotation now. Right? We know that there are sellers here. So if you're going long, you want to sell before somebody takes your customer. Does that make sense? So when you're long, you have your little position, right? And then you have your insurance. So if that doesn't work out, you get some of your money back, right? But if you know that there's going to be a seller here, right? You're long, you want to sell before those sellers take your customer, right? When you're long, pretend you're a merchant, right? And you've got a basket of apples or oranges, right? But if you know that there's going to be a seller here, you want to sell before they take away your customer, right? So let's see, Howard. I think we're going to move the point of control up. Good distribution, right? It's just a market, right? And markets are simple, but they sure as hell aren't easy. That's why at the Trading Syndicate, in our room, we want to teach you how to do this in the most simple manner so your head isn't full of all this complex crap that keeps you from making money, right? Where I grew up in a place called Saskatchewan with very practical people, right? All my buddies are hillbillies. And they had a saying there. If you can't dazzle them with your brilliance, baffle them with your BS, right? And that's what most trading education is. They want to baffle you with your BS so you keep paying fees to keep learning useless information so you can keep losing money. And it's a vicious circle, right? So what we do is we try and cut through all that crap. But then some people are still stubborn, right? Because they've been ingrained in their head that all this stuff, they see it on CNBC, they talk to other people, right, who don't know anything, and it reinforces that, right? So if you can strip that all away and you can have an open mind, we can help. Now, in our room, right, we also have, we teach you how to pass those evaluations, right, from people like our friends at Apex, right? So you can use other people's money to learn. Hey, Spacehound, that is a TPO chart on the right. For me, the TPO chart is sort of like a map of the city. The 1 minute chart on the left-hand side is a map of the neighborhood we're in. And that's what I use to execute. I execute off this. I don't execute off this. Right? If the trade doesn't make business sense, we don't take it. Right? There's a business reason for going long, and there's a business reason for being short. And it's pretty simple. Right? The business reason for going long is there's no inventory at that level, so you grab a little bit, the market moves up because they're looking for inventory at a higher price. Guess what? You're the seller, let them have it. Now, if there's selling competition, you go short and you sell alongside. You buy alongside and you sell alongside. Right? Who are you selling alongside? Size. Size is what moves the market. Right? Size will adjust price according to order flow. Now, order flow is a fancy way of saying customers. That's all. When people say order flow trading, I laugh. They're like, oh, you're an order flow trader. I'm like, yeah, so are you. No, 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 I'm a fib trader. Listen, if there was no order flow, there would be no fib. Right? It's not a flower. It just didn't spontaneously appear. Right? And I'm not knocking technical analysis or anything, but everyone's an order flow trader. Because if there was no order flow, there would be no trades. If there would be no order flow, it's called a private investment, where you buy something and sell it 30 years later if you can find somebody to buy it, hopefully. Right? So order flow is just a fancy way of people saying customers, and that's all it is. It's nothing more than that. Do you know anything about cluster? I have no idea what the hell you're talking about, Space Hound. Did you get that from space? 33 years I've been in the business, I've never heard of cluster. Other than cluster and then the bad word after it. Is that what you're talking about? I don't know what cluster is. I'm sorry. I know what a cluster F word is, but, you know, sorry. It's the odor clustered. Man, I have no idea what you're talking about. I'm sorry. I have no idea what that is. I'm sorry. Right? Listen, it's trading. It's simple. It's been around. How do you think people traded before 1995? Right? How, like, if I gave you a piece of paper and a pencil and the price every 15 minutes, would you be able to trade? No charts, no screens, right? Could you just trade using the business, right? It's a simple business. If you keep it simple, you'll make your life a lot easier because you can focus on execution, right? Your execution should be like breathing, right? You got to train yourself. You got to train that mind-body connection for execution. And that's what we do. Like when I do a mentorship program where I mentor people, and it's a lifetime mentorship, and because I work with them forever, for years, for as long as it takes for them to be successful. And a big part of what I do is execution, right? So we practice execution over and over and over, so it's like, we replay charts, we watch execution, we practice that execution so you get it down so you're not thinking about it, right? When you put your bid in, you put your stop in right away. As soon as your bid gets hit, you put your sell order in so you can take advantage of being first in line. Simple things like that, but you've got to do it over and over and over again, right? The candles are getting a little small, so business is being a little slow. It'd be nice if we got some selling. It'd be healthy if we got a nice big sell order, but right now I'm not seeing it, right? And it's not because I'm short biased, but I think selling is always essential in a two-sided market. And when you have a market where the selling shuts off all the time, it makes it harder to trade. It makes the price action a little more like, you know, crappy. It's not smooth. I like a nice two-sided market. You notice after a market sells off, the price action's a lot nicer. It's like you oiled the chain of the bicycle. Distribution is often difficult to trade because you'll get these small candles and it'll look like a barcode on a box of cereal. So you just chill out, right? The other thing that we teach is when to trade, when not to trade in our room, right? Because I'd say 100% of retail traders don't know when not to do business, and that's why they lose money. Because they're executing when there's no, because they don't have a business strategy. They don't understand the business, so they're just executing when there's nothing to be done. And you're getting stopped out all the time. So if you're having those kinds of problems, right, come visit us in our room. And if you're hesitant about spending $40, direct message me on X, right? And we'll chat, right? It's a very difficult market to trade. Yeah, we do. We have a great community of people who are consistently profitable and people who are learning how to be profitable, right? And the profitable people try and help the people who aren't. So it's not a trading room where people are banging their chest going, I made 100 points and, you've got to do what I'm doing. It's very helpful. We've got, my best student, is doing 4 to 5K a day. But that didn't come without sacrifice and time and learning. Okay, let's see if we can get down under 61.32. Come on. See how we're just distributing in this box? Back and forth and back and forth. How long did what take, John? Oh, he was already trading size. He's an older gentleman who sold a business. And I started working with him in November. And he was making good money, but his drawdowns were excessive. So I helped him stop losing large amounts of money. And that was the key. And didn't take long. You know why it didn't take long, John? Because he did exactly what I told him to do. He follows instruction extremely well. Doesn't question anything, just does exactly what I tell him to do. Just like working at a brokerage firm, right? I know it sounds bad, but if you start questioning everything and interjecting and stuff like that, it's going to be a lot harder. Just do exactly what I tell you to do. Keep doing it over and over and over again. It'll work because it's the business. Now let's see if we can get under 31. Come on. Well, I think we finally sold enough. Howard, we didn't move the point of control up. Ran out of buyers, right? So finally we got a little bit of a yard sale, right? It's hard because people have spent money on other courses and things like that, and they're very indoctrinated and ingrained. But it's okay. We'll get you there. All right, folks, have a wonderful morning. Stay out of trouble. Direct message me anytime. I'm vwaptrader1 on X, and our room is the tradingsyndicate.org. And we'll see you at 9 a.m. And hopefully we get a little bit more liquidation. See, now they've got to put it on sale, so they're marking it down. No worries, Raj. Thanks, everyone. Bye for now.